Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, to the erratic price action overnight, the market rallied on, as with gold, and re-challenged the top side but found difficulty in taking out the 1745 resistance. From the rejection, the market now looks back towards the $16.75 as minor, with the target still holding at $16.60. With the technical implications still supporting this downside move, any advances now should find a cap around $17.10 to 25. Moving on to gold, where as you can see from the overnight price action, that the precious metal attempted to rally on, but found difficulty when it reached the highs around 1280. From the rejection clearly from 81.82 resistance, the market is now set back towards the downside. Now do note the rejection did plummet from 80 high down to a 57 low, and as in that outlook does give it further implications that the market from a technical point still holds towards that 1248 level. Resistance on the day now comes in at 1268 with the immediate target seen at 58. Looking at the Australian dollar, the attempted bull move soon came to difficulty above the 76 handle. From the sharp rejection from that region now sets up a potential move to the downside, but we still need the technical implications to support this bear move. Any advances on the day sees resistance at 76.05 as minor. Now beyond there could actually see a stretch towards 76.60, so do be aware if the market does break above there again. From the outlook today, we do have the Australian monthly employment report and also the RBA Bulletin. The employment change is forecast at 9.7, previously at 37.4. along with the unemployment rate, which is expected to remain at 5.7%. Also note that the support has now risen, or the bearish trigger level should I say, from 74.70. It is now seen at 75.0515, and a break beneath there would give further scope to the downside and bring in a target of 74.30. Well, yesterday's bullish return for the euro was triggered by a poor US inflations and sales data. However, the expected Fed move came in with 25 basis point rate hike, and what is concerning is that the Federal Reserve Chairwoman Janet Yellen's bullish or hawkish press conference was slightly unexpected, and the market from the upside challenge clearly rejects from the multi-month highs that comes in at 112.80 to the figure, printing a high of 112.94, and from the rejection now sets up today for a move towards the target of 111.70. Now a break beneath there would give further scope to the downside and bring in a target of 110.7090 and reassess from there. Well, the dollar yen story fell towards a support of 108.80, and that was the low overnight and clearly rejects that level. Now despite the bullish comeback, it is now favourable that a potential bull move may now see a target of 109.85 on the day. As we can see here, the market is closing in towards that target. A break above there would give further scope to the upside and bring in a target of 110.60 to 111.4565. Looking at the technical implications, the MACD is in favour of this move to the upside, and any weakness towards 108.80, with the bull camp remaining beneath at 108 figure 35, should draw again demand and possibly display another rejection. And to wrap up with sterling, as you can see here that the market went to test that top side and clearly rejects the region around 128.10.25, with still uncertainty to the Prime Minister outlook for the coming future. Could see further weakness in the pound, which I am in favourable, and looking towards immediate target of 127.10 with the firm foundation holding at 126.35 and reassess from there. Any advances on the day should find resistance around 127.75 and firm above, as I mentioned, at 128.10.25. So that wraps up my daily video. Thank you very much for joining me, and I hope you have a great day ahead.